Hello everyone, welcome back. I got some really good ones for you today on this Saturday, January 31st, 2026. A lot's been going on with those markets, specifically in the precious metal space, so that's what we're going to be focused on for today's video. Welcome back, glad you made it, glad we could hang out together, and let's dive right into these metals, okay? This video is going to be 10 reasons why the metals are soaring. Bonus at the end, I'll also explain kind of this correction we've seen begin to unfold in the last 24, 48 hours. We've seen silver come down as much as 30%. So we'll also discuss the correction. You know, it's funny, before I can even come out here and give you a video for why we're going to the moon, we're already seeing some pretty crazy, but in my opinion, also overdue corrections in the precious metal space. So, man, that gold and silver, let's dive right in, shall we? So reason number one why the metals are soaring. Geopolitical and policy uncertainty under Trump, okay? It's kind of the elephant in the room. You're seeing it in the headlines, even if you're not trading markets or involved with precious metals. You know that Trump's foreign policy has been, pretty incoherent, and a lot of tit for tat and changing, evolving headlines every 24, 48 hours, like a lot of uncertainty and volatility Trump likes to inject into these markets, whether it's tariffs or threatening to steal Greenland or kidnapping Maduro in Venezuela. Never a dull moment. And that geopolitical and policy uncertainty coming out of the Trump administration is one of the major reasons why we're seeing precious metals run right now. That's kind of the surface, though, guys. We're going to dig deeper and deeper because there's some more deeper, nuanced, hidden reasons why, and we'll get to those as well. So reason number two, de-dollarization and alternatives to U.S. debt. BRICS acceleration, nations diversifying reserves away from exploding U.S. debt and dollar weaponization, fueling metals as a debasement hedge. So the rest of the world is kind of waking up to the idea that our monetary policy is garbage, our fiscal policy is garbage. We're not on a sustainable fiscal path. We might weaponize the dollar. So if somebody's holding, U.S. assets and they don't act right, our government has kind of set this precedent where we'll come in and we'll kind of seize those assets. And when you start weaponizing the dollar like that against other people, makes them think twice about wanting to hold your dollars and hold your debt. So we're seeing de-dollarization and alternatives to U.S. debt. So let's say also you're from Malaysia and I'm from Portugal, and we're talking on the phone right now. I just gave those countries as an example. But generally, as of the last 10, 20, 30 years, we would have been holding a lot of U.S. debt. Now, do people that live in the U.S. hold a lot of Malaysian or Portuguese debt? Not really. But are they holding our debt? Absolutely, because the dollar kind of liquefies the global economy. It has the world reserve currency status. It's kind of like, as far as fiat government issued currencies are concerned, which are all moving to zero, it's still the prettiest horse in the glue factory. It's the cleanest dirty shirt in the hamper. So they've been holding a lot of U.S. treasuries, but now if we're talking to each other, we're not U.S. citizens. We don't really, at the end of the day, care too much about America. We're not wanting to hold U.S. cash, U.S. treasuries. We're wanting to diversify out of that. And who happens to compete toe-to-toe with the U.S. dollar? Well, gold. Gold's universal. So we're seeing a lot of countries diving into gold. But even though the dollar has weakened against other currencies, I'm not coming out here, guys, to tell you that a better alternative to U.S. debt would be any other country on planet Earth. I do like gold, though, and that's one of the reasons we have been over the target and talking about gold and silver. It's going back as many videos as you'd care to scroll down, So gold's kind of universal. Gold and Bitcoin both compete toe-to-toe with the U.S. dollar, but they're not currencies. They're anti-debt units. I don't really want to get into it too much, but whatever's really good for the dollar is generally bad for speculative tokens like gold and Bitcoin, and whatever's really bad for the dollar is generally good for speculative tokens like gold and Bitcoin. So, de-dollarization and alternatives to U.S. debt. Third reason, end of quantitative tightening. We've been talking about that in prior videos. Just the last couple of videos, really, we were talking about in December especially, quantitative tightening is ending. So the Fed is no longer rolling off their balance sheet and deleting currency from the game, so to speak. They're kind of at the precipice of turning the ship, going from quantitative tightening, where the Fed balance sheet's coming down, to quantitative easing, where the Fed balance sheet starts going back up. So the market can kind of smell that QT ending, and they're looking into their hazy crystal ball, and they see that QE beginning. And so that's also getting those metals running. As soon as the Fed starts to fatten up its balance sheet, that's the Fed printing fake dollars, buying bonds, driving rates down, yields down, crowding out the private sector. And that pushes people, other investors, banks, institutions out onto the end of the risk curve. They also see QE and the Fed fattening up its balance sheet. It's negative for the dollar. It's a lot of money printing, right? So they're printing the money, People are worried about that. So the end of quantitative tightening, the Fed's no longer deleting money, and then a shift to liquidity supportive QE type policy. So, they probably give it another name. They probably won't call it quantitative easing again, but expect the stimulus to come back, expect the Fed to fatten up their balance sheet, gold smelling that and trying to get out ahead of it, kind of front running it. Reason number 4, central bank buying. Record global central bank purchases. So it's really funny watching Powell in these pressers not want to talk about gold. Go listen to it, guys. The Q&A after Powell's interest rate announcement was pretty funny because they kept asking about the weak dollar, gold, and he's like, I don't want to talk about the dollar. I don't want to talk about gold. It's like, dude, you're the Fed chair. You set monetary policy. Like, if you can't talk about these things, like, what can you talk about? But he's trying to abdicate responsibility, the blood on his hands. He's trying to wash his hands clean and telling people, go ask the Treasury about currencies. We're not going to talk to you about the dollar. We're not going to talk to you about the gold. Go ask those guys, which is funny because that's the revolving door between the Treasury and the Fed. So it's kind of like in this example, you and I are both committing a crime and I get caught and I'm like, just ask him. And then, they start interrogating you and you're like, he knows, That's how I see it anyway. But it's also funny because Powell doesn't want to talk about gold, but central banks are the one buying the stuff. So the Fed, the bankers bank, they're loading up on gold. And that goes for all the central banks, guys. The Federal Reserve, the ECB, the Bank of Japan, the People's Bank of China, all the central banks the world over have been buying a lot of gold. We're talking about record global central bank purchases. So that's your 4th reason why metals have been soaring. 5th reason, supply constraints and export restrictions. So China's kind of messing around with export restrictions, meaning if any of their companies want to, sell some silver to the United States or some aluminum or nickel or lithium or, one of these rare earth elements, like they're weird names like germanium and stuff, but go ahead and look up the rare earth elements. If China wants to sell some of that to the United States, the Chinese government's kind of stepping in and they're saying, we're gonna kind of control who you can sell to and how much. So those are the export restrictions. That's kind of choking off the amount of strategic metals that are entering the global economy. Because China mines a lot of that stuff, guys, and if they're mining a lot of it, none of it's leaving the country, and demand stays the same, then you have falling supply and rising demand, you get rising prices. So you see. So that would be your 5th reason why the metals have been soaring, supply constraints and export restrictions from China. Sorry about these planes, guys. We're going to need a lot of silver to keep these planes flying. It's not the first time I've said that in a video, too. Silver requires a lot of industrial application, meaning 50% of the silver that comes out of the ground goes into electronics, aviation, dentistry, jewelry. So 50%, guys, of the silver that comes out of the ground gets used in industry. These planes that you're hearing. What else is silver in? Solar panels, EVs. And that kind of brings me to the 6th reason, surging industrial demand. AI, electronic vehicles, solar panels, we talked about kind of dentistry, jewelry. Silver is oddly antimicrobial. It's really good in like healthcare because germs just don't want to grow on that stuff. That's kind of weird. So it's an oddly antimicrobial metal, but I don't want to get too weird on you guys. I'm just saying the 6th reason why precious metals prices have been surging industrial demand. Okay, this AI revolution, this green revolution, these EVs, these solar panels, you kind of get the idea. Reason number 7, inflation and currency debasement fears. So that, my channel's, guilty. This channel's kind of guilty of that. We've been kind of talking about the weak dollar and, currency debasement, adding 40% to the money supply after COVID. We could even go back as far as complaining about, QE 1, 2, 3, 4 they did after 2008. So a lot of money printing, and that's kind of got traders like, man, if you're just going to keep printing these dollars and it's more and more dollars chasing the same amount of valuable stuff people are trying to get. And, gold, silver can't adjust for that. A very fixed amount is coming out of the ground. And it's hard to bring new supply on the market quickly, too, because if you were to, say, go into the mining business today, you wouldn't be able to start pulling metal out of the ground for 16 years, guys. The permitting process for precious metals, 16 years. So we're seeing inflation and currency debasement fears, sticky inflation, right? I did the sticky inflation supercut for you guys like a few months back, talking about sticky inflation. That inflation post-COVID became broad, sustained, and entrenched. Reason number 8, interest rates were way too low for way too long, guys. I'll never forget it either. In 2015, I remember just banging my fist on the table saying the Fed needs to raise interest rates like back to 7% before the next recession. What happened? They dragged their feet in raising interest rates between 2015 and 2020. So by the time COVID happened, they had only raised interest rates to like 1.25%. That did nothing to stimulate the economy. So what did the Fed have to do? They had to print a lot of money. Interest rates have been way too low for way too long, okay? Put that into ChatGPT or Grok. Like, why is this guy on YouTube trying to make a big deal out of the fact that interest rates have been way too low for way too long? But if you make monetary policy too loose for too long, borrowing costs too low for too long, it trashes the value of the dollar. And we're seeing just the chickens come home to roost after years and years and years of doing that, especially following the 2010s when we printed a lot of money but didn't see a rising CPI and too bad of inflation. It was hiding, guys. It was hiding in those tech stocks. It was exported out of the country. Wherever it went and hid, it's coming out of hiding. Money velocity, money supply, both going up, and the chickens are coming home to roost. It's like rates were way too low for way too long. Should have created a lot of inflation. We didn't see that amount of inflation like for 5 or 10 years, but now we're getting it in spades. It's just kind of delayed. It's on like a delayed fuse. So interest rates have been way too low for way too long. Reason number 9, speculators and retail piling in. So the speculators, guys, they're in the room. Gold and silver, platinum, it's kind of a hot table right now. So you got a lot of people that have no business in the precious metal space showing up now. That includes the institutions like Morgan Stanley, JP Morgan, Goldman Sachs. I know they've all had pretty lofty gold price targets and they're out there buying, but also we have retail, right? So just mom and pops investors coming in off the street, going into those gold and silver coin shops and just pawn shops or whatever and just buying whatever they can. So the speculators are here, guys. Reason number 10 why the precious metals are soaring, and then we'll go into the reason why they're correcting. Reason number 10, end of long-term suppression in paper markets. So paper markets, there's a lot more paper silver out there than physical ounces of silver. Chickens are starting to come home to roost on that. If you have a bunch of claims for physical metal and you're also just shorting the paper markets to manipulate them to the downside and make money, like the banks have been guilty of doing that, you can Google gold and silver manipulation. Who's guilty? A lot of them are. JP Morgan, I think. I'm not. I could be wrong, so I'm not. This isn't libel and slander, but just look it up, okay? A lot of banks out there, Credit Suisse, even though they're like a penny stock now, but a lot of these banks out there, guys, have been manipulating precious metals for many, many years. They make money on the manipulation, and they get to kind of have their cake and eat it too, because bankers compete with the benchmark gold and silver, so they like to smash it. What's bad for gold is good for bankers. Kind of one way to look at it. One way to look at it. These bankers, though, they ain't missing a meal, and they're super long gold right now. So, take that with a grain of salt. But kind of what I'm getting at is precious metals manipulation used to be a conspiracy theory. It's not. It's real. Google Ted Butler silver manipulation, JP Morgan silver manipulation. Fines being paid. They get caught. Like, this isn't just, they get found guilty of doing it. But I mean, if we have a racket and we get penalized $5 million, but we make $20 million on the racket, we're just going to keep doing the racket. You know what I mean? And the federal government, the SEC, the CFTC, those guys, they might look the other way because they don't like gold and silver either. They're the dollar empire. So those are your 10 reasons why precious metals have been soaring. And then here's why they're correcting, guys. Over the last few days, We've had a new Fed chair get announced, Kevin Warsh. Everyone went out and sold the metals as soon as he was announced because they're a little bit worried that he's more hawkish. So he's less likely to want to trash the dollar, cut interest rates. So the market's saying, man, this guy, he's much more of a hawk, like Paul Volcker. Look up who Paul Volcker is and how he rolls and how hawks roll, and you'll kind of know what I'm talking about. So Kevin Warsh, he's more of a hawk than a dove. You know, we've had doves and baby doves over the last like couple decades. So when you get a Fed chair that's like, no, I believe in a strong dollar, it's like, look out below, dude. He might raise interest rates. You know, he might mess with the Ponzi scheme, the racket. You know what I mean? He might try to make the dollar strong, thus sucking a lot of air out of these bubbles, bringing asset prices down. Like basically, guys, if you get a Fed chair that's hawkish, he's going to say, I'm going to prioritize inflation over full employment, meaning he's going to want to make sure inflation stays low, which I'm not, guys, I'm a hawk. How about that? I'm the one who comes out here and complains to you guys all day long about the Federal Reserve and their terrible policies and the knock-on effects of their terrible policies and the beast system and how the beast system keeps feeding, whether on the meat of the middle class and perpetual war and more fake dollars. So if you put me in the Fed, man, I'd dang near burn that institution to the ground, metaphorically speaking, because I would be one of those, like, we got to disband the Fed kind of guys. So you made me a Fed chair. It'd be really good for workers. It'd be really good for the dollar. It'd be really good for savings, but it would be terrible for speculators and people that are just banking on endless free money and all this financial engineering. So as soon as the new Fed chair was announced, metals sold off. They're like, I don't want a hawk. I want a policy dove. We've had doves and baby doves. Give me some doves. But apparently this guy's track record is a little bit more hawkish. But the question, I'm kind of asking myself is, but is he going to get in and act like a hawk? Is he going to like back it up and really be a policy hawk and want the dollar to be strong? Or is he going to get in there and like bend the knee, kiss the ring, lick the boot of Trump, who wants to cut interest rates? Like Trump's the opposite of a hawk. He's a super dove. He's the doviest dove that ever dove. Trump's the guy that's going on, TV like 24 hours ago and telling you, well, we're going to keep those home prices high. We're going to keep those people wealthy. And we're going to cut interest rates by a lot. He's been saying that for a couple of years now. Well, Fed needs to cut rates. They're not cutting rates because they hate me. But if if I can get in their pocket, I can get them to cut interest rates. But what does cutting interest rates do, guys? It destroys the value of the dollar, and it makes rich people shit go higher. There you go. It makes rich people stuff go up. That's what cutting interest rates does, long and short of it. So of course Trump wants to cut rates. He's a real estate mogul. He's one of those billionaires that's 1% cash, 99%, real estate, stocks, Bitcoin, things like that. So of course he wants to cut rates, but is that what the country needs? No, absolutely not. These bankers are diabolical, you guys. The last thing we need is more rate cuts. But with that being said, we are going to be cutting rates, in my opinion, going into this year, maybe two cuts for this year, 3 cuts, something like that. We had a few cuts last year. We started cutting in like 2024. We've done 175 basis points of interest rate cuts. It's not good, guys, especially with markets at all-time highs. You should not be cutting interest rates with markets at all-time highs. That's one of the reasons gold's where it's at right now. So I gave you guys 10 reasons why metals are soaring. I hope that clears things up for you guys, and then a reason why they're correcting. But what do I think is going to happen? Dude, I'd say just stackers, keep doing your thing. Stackers never lose. Buy the dip. I think we could go a lot higher, but I'm not telling you what to do. And frankly, it depends. Are you 0% precious metals right now? Are you 20% precious metals right now? Like, depending on your allocation going into this run, might change what you need to be doing, If you're already overweight, you might want to draw down from 20% to 10%. If you're underweight, you might want to get on board with the movement here. So it kind of depends on where you're at in life, your risk tolerance. Try not to chase, guys, but I do think stacking physical precious metals for the long term is discerned. Hope this video finds you doing well. I hope you got some out of this. Like, subscribe, comment, share, whatever. You guys are awesome. Thanks for hanging out with me. Till next time.